The current integration of generative artificial intelligence into banking does not originate from customer demand or technological novelty. It emerges from a structural pressure inside the financial system. The widening gap between balance sheet complexity and the cost of human coordination required to manage it. As financial institutions scale, informational density increases faster than managerial capacity. Generative AI enters at this point of imbalance, positioned as a compression mechanism for decision labor, rather than as a service enhancement. At the structural level, modern banking operates under three simultaneous constraints. First, transaction volumes grow continuously while margins compress. Second, regulatory and internal documentation requirements expand regardless of profitability. Third, labor costs rise faster than revenue per account. These constraints create a system that prioritizes throughput consistency over interpretive depth. Generative AI is introduced as an infrastructure layer that standardizes interpretation, reduces variance in response, and reallocates cognitive tasks away from human operators. The earliest deployments focus on language-facing surfaces such as chat interfaces. This choice reflects system incentives rather than technological readiness. Language interactions generate high volumes of low-stakes decisions that are expensive to staff, but cheap to automate. The economic mechanism is straightforward. A probabilistic language model replaces human agents for repetitive interpretive work. This lowers marginal service cost while increasing response availability. The trade-off is reduced contextual sensitivity. The system accepts this trade-off because variance reduction is valued over individualized resolution. Once language mediation is normalized, the same architecture extends inward. Internal documentation parsing, compliance interpretation, and workflow routing become targets. Here, generative models function as translators between fragmented data systems. They do not improve underlying data quality. They reduce friction created by incompatible formats. The benefit is speed. The cost is opacity. As interpretive layers thicken, traceability weakens. The system absorbs this loss because audit processes are periodic, while operational savings are continuous. Portfolio-related functions represent a later stage of integration. At this level, generative AI does not act as an autonomous allocator. It operates as a synthesis engine that restructures information flows feeding allocation decisions. The mechanism shifts from execution to framing. Risk summaries, scenario descriptions, and constraint articulation are produced at scale. Decision authority remains formally human, but informational boundaries are machine-shaped. The trade-off becomes one of epistemic narrowing. The system gains efficiency in option evaluation while deprioritizing unstructured signals that resist formalization. Time operates as an active variable throughout this process. In the short term, cost reduction dominates. Headcount pressure eases, service capacity expands, and documentation throughput accelerates. In the medium term, feedback loops emerge. As AI-mediated outputs become the dominant input for downstream decisions, the system trains itself on its own abstractions. This recursive compression favors internally consistent narratives over anomaly detection. Variance appears reduced even when underlying uncertainty remains unchanged. In longer holding periods, structural dependencies form. Human expertise shifts from primary interpretation to exception handling. Skill atrophy occurs in areas where AI mediation is constant. The system responds by increasing reliance on the same tools that caused the dependency. This creates a non-linear reinforcement loop. The cost of reversal grows faster than the benefits initially captured. At the same time, competitive pressure forces parallel adoption across institutions, reducing differentiation. Second-order effects extend beyond internal operations. Customer interaction becomes standardized across platforms. Behavioral data feeds optimization layers that refine interaction scripts. The system deprioritizes exploratory engagement because it is costly and difficult to scale. Financial products become linguistically simpler while structurally more complex. This asymmetry reduces surface friction while increasing embedded opacity. The system benefits from reduced inquiry volume and higher process compliance. In portfolio contexts, generative systems influence risk framing. When scenarios are summarized algorithmically, tail complexity is compressed. Rare configurations receive less narrative weight because they are underrepresented in training distributions. The system does not eliminate awareness of extreme outcomes. It reduces their salience in routine decision cycles. This trade-off is accepted because operational tempo favors frequent, moderate adjustments over infrequent structural reconsideration. Cost absorption follows a predictable pattern. Initial investment costs are absorbed at the platform level through capital expenditure and vendor integration. Ongoing savings appear in labor, training, and error correction. These savings do not flow evenly. Senior decision layers retain authority, while middle interpretive layers contract. The benefit flows upward as margin stabilization and downward as reduced service friction. The cost flows laterally through increased systemic opacity and reduced interpretive redundancy. Risk distribution shifts rather than disappears. Model errors propagate faster than human errors because they scale instantly. The system manages this through probabilistic thresholds and confidence scoring, which creates an illusion of precision. Oversight functions adapt by auditing outputs rather than reasoning processes. This narrows the window of intervention. The system deprioritizes deep causal inspection because it is incompatible with speed and scale objectives. Feedback loops intensify as generative outputs inform training updates, policy adjustments, and interface design. Over time, the system converges toward internally coherent representations that optimize for measurable outcomes. Elements that resist quantification, including qualitative judgment and contextual deviation, receive less institutional support. This is not an ethical decision. It is a resource allocation consequence. At the system level, generative AI in banking functions as a stabilizer under margin pressure and complexity growth. It reallocates cognitive labor, reshapes informational boundaries, and compresses variance. The benefits accrue as operational continuity and cost control. The costs manifest as opacity, dependency, and narrowed interpretive scope. The system accepts these outcomes because they align with its structural incentives. The result is a banking environment that processes more information with fewer humans, while understanding less about the uncertainty it contains. As generative AI becomes embedded across banking workflows, its role shifts from operational support to structural influence. At this stage, the system no longer evaluates whether to use generative models. It reorganizes itself around their presence. This transition marks a change in incentive alignment. Efficiency is no longer the primary objective. Coherence becomes the dominant constraint. The system begins optimizing for internal consistency across decisions rather than for accuracy relative to external conditions. This shift alters how uncertainty is processed. Traditional banking systems distribute uncertainty across multiple interpretive layers, creating friction, but also redundancy. Generative systems compress interpretation into fewer layers. Uncertainty is translated into probability-weighted language outputs that appear stable over time. The mechanism reduces visible volatility while preserving underlying exposure. The trade-off is delayed signal recognition. Instability becomes observable only when it breaches predefined confidence thresholds. Time dependency intensifies under this structure. In short horizons, compressed interpretation increases decision velocity. Approvals, reallocations, and compliance routing occur faster. In medium horizons, repeated exposure to the same abstraction layer reshapes institutional memory. Historical context is summarized rather than retained. The system deprioritizes longitudinal understanding because it is costly to maintain and difficult to encode. In long horizons, this produces path dependency. Decisions reference prior summaries rather than original conditions. Portfolio-related processes are affected through constraint formalization. Generative systems excel at expressing constraints in language-readable form. Over time, only constraints that can be consistently articulated survive operational scrutiny. Ambiguous or qualitative constraints are gradually excluded. This does not remove risk. It redistributes it toward dimensions that remain outside formal representation. The system accepts this redistribution because it simplifies internal coordination. A feedback loop emerges between performance evaluation and information framing. When outcomes are assessed using AI-generated summaries, the criteria for success narrow. Metrics become aligned with what the system can describe reliably. Deviations that fall outside the descriptive range are treated as noise rather than signal. This nonlinearity favors strategies that perform adequately across modeled scenarios while suppressing strategies sensitive to unmodeled conditions. Cost structures evolve asymmetrically. Initial savings from labor reductions stabilize operating expenses. Secondary costs appear in monitoring, model validation, and data curation. These costs do not scale linearly. As system reliance increases, oversight complexity grows faster than operational savings. The system absorbs this imbalance by reallocating responsibility rather than increasing scrutiny depth. Accountability shifts from judgment to process adherence. Benefit flow concentrates at the coordination layer. Entities that control model integration, prompt architecture, and data pipelines gain leverage. Downstream units experience reduced autonomy as decision framing becomes centralized. This does not manifest as explicit control. It emerges through dependency on standardized outputs. The system deprioritizes local discretion because it introduces variants incompatible with compressed workflows. Risk transmission speed increases. When generative systems misinterpret or overgeneralize, the error propagates uniformly. Human-mediated systems distribute errors unevenly, allowing localized correction. The AI-mediated system sacrifices containment for scale. This trade-off is tolerated because correction mechanisms are designed for frequency rather than depth. Errors are expected to be small and frequent rather than rare and severe. Another second-order effect appears in regulatory adaptation without explicit reference to regulators. As documentation becomes AI-generated, compliance language converges. Distinctions between institutions blur at the narrative level. This convergence reduces interpretive disagreement, but increases systemic correlation. When multiple entities rely on similar abstraction layers, they respond similarly to stress. The system deprioritizes heterogeneity because it complicates coordination and increases monitoring costs. Human expertise is reclassified. Skill value shifts from domain understanding to system navigation. Professionals become validators of machine-generated reasoning rather than originators of analysis. Over time, this changes training priorities. Deep structural comprehension is deprioritized in favor of interface fluency. The system accepts this shift because it aligns with shorter training cycles and lower replacement costs. Nonlinear degradation occurs in edge case recognition. As generative systems optimize for dominant patterns, rare configurations receive minimal representational weight. This is not a data availability issue alone. It is a structural outcome of probability-weighted language generation. The system compensates by introducing exception flags, but these flags depend on the same abstraction logic. This creates a circular dependency that limits corrective reach. Portfolio oversight becomes narrative-driven. Risk is discussed in synthesized language rather than examined through raw structural exposure. This increases communicability while reducing analytical resolution. Decision-makers receive clearer summaries with fewer degrees of freedom. The system deprioritizes exploratory dissent because it disrupts coherence and slows throughput. In longer horizons, institutional adaptability narrows. When external conditions shift outside modeled regimes, the system responds by recalibrating language outputs rather than revisiting structural assumptions. This response is internally rational. Rebuilding foundational interpretation layers is costly and destabilizing. Incremental adjustment preserves operational continuity even when fit deteriorates. The distribution of gains and losses stabilizes around visibility rather than impact. Benefits accrue where efficiency is measurable. Costs accumulate where opacity is tolerated. Customers experience smoother interfaces with fewer resolution pathways. Institutions experience lower variance with higher tail dependency. These outcomes persist because they align with prevailing incentive gradients. At the system level, generative AI functions as an alignment engine. It aligns language, process, and evaluation around compressible representations of reality. What cannot be compressed is gradually excluded from routine consideration. This exclusion is not intentional. It is a consequence of optimization under constraint. The banking system does not become more intelligent through this integration. It becomes more internally synchronized. Coordination improves while understanding becomes narrower. The system accepts this configuration because synchronization supports scale, and scale preserves stability within known bounds. Beyond those bounds, the system relies on recalibration rather than reconsideration.